Yes, not a single Wall Street analyst currently recommends selling Uber shares. We'll dive into this topic in more detail in the next minutes of the video, but if I were you, I'd definitely watch this video until the end to make sure you don't miss this opportunity. Uber's current market capitalization stands at $176 billion, and it's no longer just a ride-hailing company, it's evolving into a multifaceted tech giant. In Q1 of 2025, the company's financial results, especially its revenue and net profit, exceeded market expectations. This clearly indicates that Uber is entering a whole new phase. In this phase, the company is starting to focus on new areas to further boost its revenue. Uber's main goals in this new phase include passenger transportation with autonomous vehicles, generating additional revenue through in-app advertising, and capturing a larger share in the freight and logistics market. Now, let's take a closer look at Uber's financial report. According to Q1 data, Uber's stock price has risen by 157% over the past 5 years, and just since the beginning of this year alone, it's up by 40%. A 40% increase since the start of the year is an impressive result for a company like Uber, placing it ahead of many other firms. This growth also shows that Uber holds a strong position in the market and that investors have a high level of confidence in the company. Despite increasing its revenue by 14% during this period, Uber managed to boost its net profit by a staggering 357%. Additionally, the company's free cash flow rose by $2.3 billion, up 66%. This transition makes Uber a highly profitable business. It's not just generating revenue anymore. Uber is now delivering solid net profits and free cash flow, which signals a shift towards a more sustainable business model. When we look at the margins, Uber's gross margin has reached 40%, EBIT margin is at 10.6%, net margin is 15.3%, and free cash flow margin stands at 20%. Having net and FCF margins in the 15 to 20% range shows that Uber is managing its expenses efficiently. In short, Uber is no longer just a growing company, it's now a winning company, and that represents a great opportunity for many investors. Currently, Uber's price-to-earnings (PE) ratio is 18, but analysts expect this number to increase to 20 by 2027. This could be a strong investment opportunity, as it suggests that by 2027, Uber will be a more valuable company compared to today, meaning its share price is expected to rise. Speaking of forecasts, let's now take a look at the predictions of 34 Wall Street analysts regarding Uber's stock. According to 33 of these analysts, Uber's stock will be worth at least $84 in the next 12 months, even in the worst-case scenario. In a more average scenario, the price is expected to reach around $97, and if things go really well, Uber's stock could climb as high as $115. What caught my attention most is that even the average price target is around 13% higher than the current price of $86.03. Even the lowest price forecast aligns closely with the current trading level. On top of that, not a single one of these 33 analysts recommends selling Uber stock. 4 of them suggest holding your current shares, while the remaining 29 believe it's still worth buying even at today's price. As I always say in every video, let's stick to tradition and wrap up with a small reminder. If you'd like to receive up to $30 worth of free cryptocurrency or stock, be sure to check the description of this video. And always keep in mind, the $100 investment you make today could turn your life 100 times better in 10 years.